waiting for that signature on the dotted line. But let's go across to Arvind Sangar, Managing Partner, Geosphere Capital Management, joining us this morning to talk to us about what he's making of markets. Arvind, that reaction on the street, especially with regard to global markets, of that rate cut, slightly delayed, maybe a day delayed. But what's your take? What's causing this kind of move, especially in the US market where we are notching all-time highs?
Well, I think that it was seen as a less hawkish cut than the hawkish cut that people were expecting. So it's a very fine line in terms of everybody was expecting one cut and then they'd say they'll wait. And they said that, but Chairman Powell said it with a less hawkish tone. So there's the door left open that there might be another cut coming in the, maybe in the next 2 or 3 meetings. Obviously, unlikely in the January meeting, but still, the door was left open, which was better than the market was fearing.
Oh, yeah, absolutely. Arvind, also wondering what kind of movement of flows are we going to see when it comes to world markets? Will it continue to be favored select emerging markets and, of course, the US, or do you think that could change perhaps, at least tactically?
Well, look, US has had a great run. US has had a great run for a long time. Emerging markets have been laggards, in the leading up to the last year or two. But I think that as growth in other parts of the world picks up, and if President Trump has his way next year in terms of Fed getting a little more dovish outlook, then that is dollar weakness inducing. And if that happens, then I think emerging markets are going to benefit from people looking for non-dollar assets where there's both growth available and minimize exposure to dollars. So I think in that sense, emerging markets could continue to have a good run in 2026. India, of course, has missed out on most of the emerging market money flowing in 25, but hopefully India's own economic outlook continues to improve, and that'll drive part of those emerging market flows to also start to show back up in India.
Arvind, what do you make of future rate cuts coming through in the US, and what does the additional liquidity do with regard to global equities? Do we continue to see global equities do very, very well? I'll just quickly take you through what the CME Watch tool is indicating. Was earlier or maybe a week ago indicating a 25% off a 25 bips rate cut in the next meeting. Continues to be that, so no real change there. But markets certainly seem to be taking this in far more constructive a fashion than what was penciled in maybe a week or so ago. So trying to get a sense of what this means.
Well, yeah, I don't think January rate cut is a high probability, and obviously the data is showing that. But I think a rate cut, during the first quarter is still, a little bit on the table, more so than it was before the meeting. And certainly, in the next 4 or 5 months before Chairman Powell steps down, I think there's an even chance or better that there could be a rate cut. But more importantly, if we're looking at not just the next month or two, but we're looking at President Trump appointing a dovish Fed governor to take over from Chairman Powell, which could come in January, and the market's starting to see the tea leaves of what's coming in the rest of 2025. I think the hope is going to keep rising that the Fed is likely to stay dovish. And if that's the case, then that is definitely going to drive non-dollar assets to benefit if the Fed is seen as overly dovish, maybe slightly dovish for the next 4 or 5 months, but much more dovish in the second half of the year.
Arvind, great to have you on the show, and thank you so much for your insights today.
Thank you.